Welcome to Things Invest, where talk about investing, finance, and professional development. As a recording time of 9:35 a.m. on the Eastern Time, Ethereum contract $2,728, up about 3.48% so far. As you can see clearly on the crypto market and the equity market, we are rebounding from falling into the correctional territory yesterday. And on a technical front, it obviously, incentivized the market to be looking for a reason to rebound, right? And from the Joe Biden speech that we heard from yesterday, obviously with the tranche 1 sanction that's been in place alongside with UK and other countries onto, potentially mitigating the tension that's frankly cultivating on the offensive front from Russia on invading, obviously, Ukraine. That conveys some sort of optimistic type of sentiment. And at the same time, in an optical perspective, the invasion technically has not really, blown out. So it seems like, across the spectrum, people looking for a reason to buy in. At the same time, the technical checks out, right, that it was relatively oversold. So indicating people, on driving the buying pressure across the spectrum. Right, so without wasting any more time, let's just dive into technical analysis with respect to recording time of 9:36 a.m. on the Eastern Time. Ethereum contract $2,730, up about 3.5% so far. Right now, we can see clearly we bounced from the 3620, right? But the next level we need to get to is not the current level, right? The current level we are levitating around 2700 to 2750, but the real confirmatory level is 2850, right? So we still have some room to go up to. It seems as the rebound is relatively nice, right? You can see that we were submerged at the 37 out of 70, so that's approximating at the oversold level with the 45 right now. At the same time, on the MACD, it is also curving up, so that means the scoop on the inertia is definitely forming. So it seems like the rebound is happening, but can we get above 2,850? That's the question mark that we need to get through. So we'll dive into other ones as to see with Bitcoin, do we see a drag effect that's going on? With respect to Bitcoin, we are in a comparable fashion at the 43 out of 70, curving up slightly on the MACD as well. Not as prominent compared to Ethereum. Seems like in the drag effect perspective is still, we still have some room to go up to. We are at the upper echelon right now, the 38,900. So technically 39. Let's just give that benefit of doubts, round that up. So if we are able to get above 40,000 by closing today, we are technically rebounding. So something to watch out for to see if this is sustainable. For me, I think with respect to the cultivation of the tension, there's still lingering factor that's unsolved so far, and also with respect to the interest hikes that is that Jerome is triangulating alongside with the job numbers, etc., that also with the mixture of some tech earnings across the spectrum as well, that could technically drive some stir. But the big main events that is happening, coming up from the Feds is technically going to be happening in mid to the first couple of weeks of March. So we still have some time to to hold up from. The cultivation of the main events that we're seeing right now is really revolved, obviously, around the Russian war. So if we hear any more surprise or negative news, let's just say, out of nowhere, they decide to really launch missile and fire and attack people in the Ukraine region or colonizing even, that's, a breakout and a crash down of the market can be possible. And the next crash down would be ideally, obviously, breaking the first level of 37,500 and then all the way to 34,500. And for Ethereum, will be obviously breaking the 2620 all the way to the 2362, which we almost got to yesterday. But obviously, we were able to rebound because by that, we will relatively submerge on a technical level. Dogecoin at 1341 right now, so the 41 out of 70, so ideally anywhere from 12.86 all up to 12 cents is still better level $2 cost average at. Cardano's at 93 cents right now. Rebounded from the 81, which is the level of technical support. We were extremely submerged at exactly 30 out of 70. At the same time, we are curving up, so the next level we need to get up to would be somewhere around 102 to be sustainable. Obviously, $1 is going to be a monumental level, so if we do not get there, we'll obviously bounce back down and fall back to ideally somewhere around obviously 93 to 80. So I think dollar cost average wise, anywhere from below 93 all the way to 81 is still logical. Solana's up about 6%. We are reviving right now, 41, 42 out of 70. We're curving up. So yeah, anywhere from basically 90 all the way to 80 is still logical to dollar cost average at. Right now we are a little bit above it, so I'll probably wait for the market to cool down a little bit, because the rebound was relatively more of a technical exercise rather than anything macro driven. So with respect to XRP, it's up about 2.7%, bounce from the exact level that we identified, 0.69, right? At the 47 out of 70, there's no signs of true curvature up yet. So on the MACD front, it's still relatively not the most bullish setup yet. So in a risk aversion perspective, I'll just place my order somewhere around 62 to 57 from here. Polkadot up about 3.61%. Anywhere from basically, yeah, I would probably not touch it yet. Anywhere from 1655 all the way to 1581 is still more logical. Algorand's up about 2%. Anywhere from basically current level. Current level is like okay with the 47. Let me just double check to make sure the RSI is correct. Yeah, anywhere from current level all the way to 76 cents is still logical. We're still relatively oversold despite a slight surge right now. Shiba Inu is at the mid 2000s again. You can see that clearly we're reversing up at the 48 out of 70. So again, low 2000s, 1400, 900 from here. Polygon 142 to 120. Like we bounced from exactly 143. Whoever bought in between these levels, that was the logical move. And right now it seems like we're rebounding, curving up 44 out of 70. AVAX up about close to 10%. Anywhere from 59 to 50, we're reviving back up. But this doesn't look like a logical pattern for you to incur risk at the moment. We are sustaining back up to the comfort level of 79 to be exact, right? We bounced from the 65, which is the level that we have formed here. But the real level we need to get to, which we got to above, is 81. But what we need to get above further to keep going is to go to 93. Right now, the 50 out of 70, so the risk is not the best in terms of incurring. I think 59 to 50 is still more logical. Luna is 10% right now, at the 56 out of 70, so relatively too fast, too quick. So definitely not a good level to buy right now. The better level was days before when I was screaming a buy signal before, right? So anywhere from 62, 52 to 45 from here. So what you're seeing right now, the rebound is really just a technical exercise. It's not really, and on top of the optimism that we see from the speech yesterday, but ultimately there's still a lot of lingering factor that's up in the air right now. So I wouldn't be too happy too quick yet, right? But obviously, with respect to risk management level, the levels are out there. So I'll still stay within the logical frame and not be not shift your mind just because it looks green on today and looks relatively promising, especially on the altcoins after house, right? But yeah, let me know if you have any questions, and hope you guys all have a great Wednesday as well, and take care. Bye.